All right, good afternoon, everyone. Futures Brizio here. It is 4:30 p.m. on Tuesday, October 14th. Hope everybody's having a good week so far. And as always, just make sure you smash that like button, subscribe to the channel, and any questions or comments, leave them all down below. So we'll just jump right in here. As I mentioned on the last video, which I think I made over the weekend, I know I did not post yesterday. Um, the U.S. government is still in shutdown. So, from a standpoint of commitment of traders reporting, we have not gotten an update now in 2 weeks. So, we should have had the last update this past Friday. We did not get one. We didn't get one for the previous Friday. So, again, we're, excuse me, we're about 2 weeks behind. And so, sorry, guys. Um, Sorry about that, guys. I was eating something and obviously I did not swallow it right, so I apologize. Um, but like I was saying, we're now a couple of weeks behind, so I'm almost at the point where I may just suspend my trading until we start getting that data again, because I do feel very strongly about it. But we'll see. I mean, I have gone and looked and set up some, just technical levels on my charts here. That maybe we can get some trend continuations. But this is basically flying and analyzing without COT data being up to date. The last update we had was September 23rd. So really, that's old news now. And we have no idea, where those levels stand right now. And until the government reopens, then this is the situation we're going to be in. So unfortunately, just one of those things when you have to rely on a third party. Um, so I'm just going to quickly just run through my charts here very, very fast. And then I just want to show you another way to try to analyze COT data once we do get it back in TradingView. Now, again, we also can use seasonality data too. As I mentioned, the seasonality data is obviously not affected by the shutdown. That's historical data to look at patterns during certain months of the year. We do still have that. However, I really do like to combine it with COT and kind of have the two aligned. And not having the updated COT data obviously makes that impossible right now. So either I just use the seasonality alone, or in combination with price action, or I just don't use it at all. So I am watching some particular levels, just based on where COT is. But right now, the COT data for most of the markets that I follow is is not following the current seasonal trend. So, are we going to get a shift? Well, I'll have to see technically if we do. But it would help if if I had the COT data to back that up. So let's just take a quick look. So this is corn. You can see I have a couple of moving averages on the chart here, not obviously needed, but so this is just the 1 hour chart of December corn. And again, recall that both from the last COT update and seasonality, that corn should be going up. And you can see that, we've been basically trending down on corn for quite a while now. I mean, we hit this, peaked out on this high back in mid-September, almost a month ago, and we basically been trading down. This is the 4 hour chart here. We had one little push back up, but it didn't change any market structure on the higher time frame, over here. So we're still trending down. Back on the 1 hour chart, here's the latest leg down. So in terms of a market shift, again, understanding that the seasonality is definitely bullish in corn, and the COT on the last update was quite bullish too. Let's see what happens. This is kind of a 1 hour level to watch. We did have a little bit of bullish momentum today, but you can see, obviously with the limited hours that these markets are open, it doesn't make a lot of advancement. But, if we get a break over this kind of last 1 hour swing level, which is right here, then, that could be a reason for me to think about longs again, at least to trade back up towards this higher 4 hour level up here. Um, We have this 4 hour zone up here. So, we could see, price kind of work back here. But it really just depends on, what happens with this COT data. So, again, all of this would just be based on either technical structure or seasonality at this point. And so, from a technical standpoint, here's our last swing, at least on this time frame. So, let's see what happens. Or if we get rejected through here tomorrow, obviously the market's closed for the day now. If we get through this level, or if we just get up here and bounce and sell off again. We did put in a higher low right here. That doesn't really mean much. We certainly can put in a higher low and still have it just be a retracement. So I'll be watching this area probably tomorrow to see if we can get any kind of real bullish push through here. That might at least turn me short-term bullish, even though I'm flying without the COT data. All right. So rice just continues to trade down, actually kind of sideways. Remember the COT data and seasonality on rice. Let's see. So on rice, we have a little bit of a conflict. We have neutral up on rice as of the last COT update and neutral down on seasonality. However, rice should start to, from a seasonal standpoint, start to go up in November. So again, I'm probably not going to do anything with rice the entire month of October. I'm just going to keep watching it and look for a potentially bullish shift come November, and hopefully we get the COT data back by then. Soybean meal, much like corn, the whole soy complex, whether it's soybeans, soy meal, soy oil, seasonally are all supposed to be bullish right now. This is soybean meal. You can tell here, we did have this bullish run up back in the beginning of October. It looked like this was going to be the turn, start going seasonally higher. We've now pulled back. This is the 4 hour chart. We've pulled back off this level. And you can see, today we had some equal lows right here put in today. Was not able to break through this 1 hour previous low right here. And from the 4 hour level, if we look left, you can see this area seems to be an area that the traders want to hold. So much like corn, I'll be looking to see, this is, technically the current swing level is probably more like, up here somewhere in terms of what led to this low right here, originated up here. Okay. But I have this level marked off right here because if this low holds and we don't break through here and we turn and go higher, maybe that's the resumption of the seasonal uptrend in soybean meal. Okay. Because we had this impulsive move up that aligned with the seasonality change. And then we've had this very choppy move back down here. Lots of small candles, lots of wicks. This to me looks corrective, right? It's not impulsive. This is, other than this candle right here, this is not an impulsive move. Okay. And, if you want to look at Fibonacci, not really sitting at a key fib level somewhere between the 61 and the 78. So, I do think that, maybe, if we can get a break above this level, whether you want to use a trend line or just a structure break, perhaps, that would give us a technical reason to buy it, and that would align with the seasonality. Okay. So again, I'm flying, with basically one hand tied around my back from this standpoint. But going by, at least looking at seasonality, we just might be delayed, right? The seasonality, first of all, like I said, doesn't work every year anyways. So it could just be that it's just going to continue to go down and not even give a care about the seasonality, or it could just be delayed, right? So we had a delay in the seasonality, after this big run up. They're trying to like flush out longs here and just get people to, buy back into a downtrend. And it's been trading down since early October here for about the last 2 trading weeks. All right, so let's see what happens. But if we can get a nice bullish break here of this downward slope, I'd feel comfortable from a seasonality standpoint to start looking at longs again. All right, so on to soybeans, pretty much ditto. This is the 4 hour chart. We had off this low. We did have, what looked to be a nice bullish break. It's now come back down. This one was more impressive from a bearish standpoint on the 4-hour chart. Though again, we did hold these recent lows right here. So this low was put in yesterday or the day before, or so I guess would be Friday. Let's see. I'll be guessing here. The 13th. Okay, so these were our lows that were put in yesterday. Today we tried to break through there multiple times, kept bouncing off of there. So again, much like soybean meal, if we can get a break higher, a nice bullish break above some structure. This is a structure level here, although it's not technically a good structure level because we didn't really get a new low out of this. I mean, I guess technically we did here, but I like to see a closed low, not just a wick. Our technical level still sits, up here. Um, Actually, no, the technical level actually sits over here on the 4-hour chart because that's what led to this low down here. So let's see what happens on soybeans. And again, I think the whole complex will move together. I think, if we get a move higher on soybeans, then soy meal and soy oil will follow. So this one's not the cleanest one. Soy meal definitely looks more bullish to me, potentially setting up for a bullish move. All right, and on to soybean oil. Again, holding these lows right here. Okay, we this is not technically a swing high right now because it has not led to a new low. All right, so technically this is our swing sitting way up here. But if we can get a move higher beyond this level and start to push, above these little minor swing areas like right here, that's why I have this one marked off. This is like kind of like a 1-hour level. If price can, blast through here, then maybe we start making a run back towards like this 4-hour high. And again, that would be in line with the seasonality, even though we don't have COT data to back us up. Okay, but if we get a technical break and we line it up with seasonality, I still would think about longs. But I have no confirmation of that right now, and until I see a change, it's just not, it's not something I'm interested in. But all three of these markets, well, actually four if you include corn, maybe we're starting to see the signs of seasonality taking back over, but we'll have to see. Right? But we are in a downtrend right now, and until that changes definitively, then we're in a downtrend. So regardless of what the seasonality talks about. All right, and then briefly in these currency markets, we did see Australian dollar, which is the one I've really traded the most lately, took a run back up, did kiss the moving average, the 50-period moving average day, and had several rejections off of there. So this is our technical swing level up here on the higher time frame. But we are sitting, and you can see this thing does tend to respect the 50-period moving average. So obviously I'm not trading it right now, but I'm, even though I don't like trading during the Asian session at all because it tends to not play out too well during the London session, but I will be keeping an eye on this for another potential short setup. Again, from the last COT data, the New Zealand dollar and the Australian dollar are down. Okay, I don't really look at seasonality with currencies, but from a technical and last COT update, we should be seeing lower prices. So we'll see what happens with that. Okay, British pound, from the last COT data, we should be going up. We clearly have not been going up. We've been going down really since, again, for about the last month, we've been trading down. All right, so until we get, and again, I don't know what the COT data is showing now, but, any break probably above this recent swing would potentially indicate that shift more bullish. But as long as this holds right here, this could, just be a retracement. We continue going down. So we do have COT conflict to price data here. So I'm not too thrilled about trading British pound right now unless I had an update on the COT data. So, but I will watch it for a shift higher. As I said, the COT was suggesting higher prices. All right, and then this is the New Zealand dollar, pretty much a copycat of the Australian dollar. You can see we're back to the moving averages. We do have several levels here depending what time frame you want to look at. This is our kind of like our 1 hour zone, basically anywhere in here. We are sitting right back at the moving averages again. And so I think as the New Zealand dollar goes, so does the Australian dollar. And so I like to just go back and forth and look at them and see which one is painting a clearer picture. But I wouldn't take a trade on both of them at the same time. If I wanted a trade, I would just pick the one with the cleanest setup and go with that. And that's been the Australian dollar for the last couple of weeks. But they both pretty much look the same. Again, from a COT standpoint, the last report did show them as bearish, and I don't really see any reason to change that outlook. These are nice pullbacks right into the 50 period. So again, let's see what happens during the overnight or into tomorrow, and potentially look at more shorts on this. So from a standpoint of when these moves actually happen, I'm just taking a quick look here. Some of these moves happen during the New York session, and some of them happen during the Asian session, the late Asian session. A lot of times it would be, when I'm not awake, but this is 5 o'clock. So this is like midnight or so my time. This is 13. So this is New York open. This is like between 5 and 8. So this is late London, late Asian, early New York. Early London. This is same thing. This is basically Asian to early London. And then this is New York. And then today we rallied up into the New York session and then stopped. So we get various times, but it's not totally out of the norm that the downtrend could happen during the Asian session. And then like what we have had here, we push down, and then London opens, we have a pullback as they grab some liquidity, and then they push it down again. So this is an ideal setup. You get a bearish setup during Asia for these currencies, since these are Asian market-based currencies. You can get that push down, and then this is the pullback during the early London session as they, try to grab some liquidity and stop people out, and then they push down and continue the trend. So that's the bottom line for both the Aussie and the Kiwis, that I'm still bearish on these, and I'll continue to look for shorts either during the Asian session or New York. Obviously, I'm not awake during the London session, so anything happens then I miss the trade. So, but I also have to be prepared that if you do open a trade during Asian session, you have to be generous with your stop loss and be careful with your position size, because you can rest assured when London opens, you're going to see at least a temporary reversal from what happened during Asia. Whether that continues or whether it's just a liquidity grab, that remains to be seen. But you got to be very prepared for stuff like this, right? Where you're going to get several hours of the market pulling back before the trend continues. So we'll see. Those are the two that I'm kind of looking at the closest right now. And again, all those grain markets are really just based on technicals and seasonal levels right now, as I can't really do anything with COT. So, all right, so that's it for that. Just quickly, I want to move over to let me see here. Why is it not showing? Oh, okay. Hold on one second, guys. Okay, sorry about that. I had an indicator I needed to put back. Okay, so we're back on TradingView here. And I don't want to muddy the waters here. So this is another TradingView COT indicator. So we're staying on commitment of traders here, okay? There's an indicator, you can see it right here. It's called COT, commercial versus non-commercial. And if you go to your indicators and you just type in COT, you will find this indicator. It's in this list somewhere. All right, I really don't want to sit here and bore you looking, but it is in here. I probably just passed it. I should have put it in my favorites, but I was still testing it. But anyways, if you go in there and you find this indicator, just go into your indicators tab, just type in COT. I don't know, maybe I can find it if I put in a little bit more of the description versus, let's see. Okay, yeah, here it is right here. It's by Noldo, Noldo. Oh, no, that's not it either. Yeah, okay, because this is different and this is a protected one. But anyways, this is the indicator. And basically what I did with this is I'm only showing the large traders, which is not the commercial traders. These are the large traders, the speculators, the large speculators, like the hedge funds, not your producers. So more like, your brokerage houses and your hedge funds and your managed funds that, the big traders. They're speculators like you and I, but obviously they operate with a heck of a lot more money, and they basically mirror the commercials. And you can keep the commercials on here too, but there's not really any point because they're always going to be kind of mirror opposite of each other. So just for the sake of a clean chart, I just turned off the commercials. And so what you do with this, and go out to a higher time frame here, and let me zoom out a little bit. And you can see what it does is, so this is just the net positions of the commercial trader. So this is just the COT, and you can see this long straight line here recently. This is because we've had no update in 2 weeks. That's why we see the current level of this just kind of like this flat line, because there's been no update in 2 weeks. But if we just go back here, you can see, and I'm on an 8-hour chart, and this works really on any time frame. I would recommend not doing this on anything shorter than a 1 hour because it gets too granular. But essentially, if you can zoom out on your chart, and it creates this like stair step on the COT, and every time there's a change here in this stair step, that's the weekly update. So if you take this right here, so this is a whole week right here. So from left to right, from here to here, you can see my little finger pointer there. This is 1 week. Let me zoom in a little bit. Right, so this is 1 week, and then the next week, the report comes out, and it came down here. So this is just a connecting rod, basically, between here and here. So this was the change from this week to this week. So they went down, and then the next week went down again. Next week it went down again. Next week it was pretty much flat. Okay, went up a little bit, but it was pretty much flat, and then down, and then down, then flat. Okay, so now if you look up at the chart at these corresponding areas, you can see here we had this uptrend, and then things flattened out, and look what happened. The COT flattened out. We had, technically it went up these 2 weeks, these tiny, tiny little increases right here. I don't want to put my cursor over it, and if you look right here, we had a tiny little increase right there, and then we had another one right here. But essentially, it was flat, right, on these. And then if you look up the price at that time, what happened? The market came up, it flattened out, tried to make a new high, and then boom, it crashed down, right? And so this flattening is a really good sign that, at least temporarily, if not more long term, that the market's probably going to reverse. And I mean, you want to look up at the price too, and not just rely on this, because this can actually show a little bit delayed, where the price actually starts to move before this does, which is unusual, but it can happen. So, but you can see right here, going up, up, flattens out, price falls. And then we have move down, move down, move down. And right here, where it flattens again, right here, price flattens and then goes up. That's this pullback right here. So there's 1 week, it kind of had a little tiny move up and the price went up. Okay, but it's very, very small. Okay, and then it started down again, down. Then we had another little tiny move up, which was another pullback on the chart, and then down again, down again. Okay, and all that time, now here it went down twice, but yet the correction, it was still going up. But this would lead you to believe that this was only temporary and it was going to lead to another down move, because as price was going up right here, the COT on these 2 weeks was still going down. So it gives you confidence that whatever this was just a pullback, and you should have been looking for re-entering this market short. Okay, then we went down again. Then we had another little pullback here, and then price went up. Okay, we had this pullback, then we went flatline. Now this is where we are now. You can see it went flatline, it went up and then flatline. And we had another pullback, and then price has been going down since then. So I would imagine if we had up-to-date COT, we would see this thing continuing to stair step down because the prices continue to go down right here. But I just wanted to point this out, that this is another way you can look at the COT data, besides looking at either the COT index, like I was showing here. This is the COT index, or the traditional COT, which is what's down here. Okay, this is just another way of looking at it. And this is just looking at it in a stair-stepping fashion. And again, this is the large traders. This is not the commercials. I just turned off the commercials, but you could put it on here. You would see a green line that's a mirror image of this one. But just for the sake of a clean chart, I just turned it off. Okay. And again, you can do this on any time frame. I mean, you can go to a daily chart. Here's that same stair stepping on the daily chart. You can do it on a shorter time frame, but again, the shorter you go, though, obviously you go down to a 1 hour chart and you can see what this looks. This is just too short. It makes this indicator so wide because it has to cover. Remember, it only comes out once a week. So these lines have to get really long because it has to cover 7 days of trading. So there's a week between, here and here. And so it just flattens this out. So it's just not really usable like this. So I would recommend like the 4 hour chart at the highest. And even then you have to really zoom out on price to see this. Okay, but you can do the 4 hour, but you start to go out to a little bit higher time frames, like the 6 hours, a nice one. And you can see these stair steps. All right. And again, I would say go back and test this. And because it's pretty good at giving you an idea of where the market's going to go. So like, right here, right? We see price start going up, stair step up, stair step up, stair step up, starts to flatten out right here. And if you look up at the price, we did start to trend down. So that's why you can't just go by this, because by the time this thing rolls over, the price is already way over here, right? So this thing was going up, 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 up. The price right over here starts to reverse, but you don't get a downward push on this indicator until the price is already halfway through this move. So if you were long in here, you've probably gave back most of your money. So that's why you can't, that's the one drawback with this is going to have a delay, because remember, the COT data only comes out once a week. So somewhere in here, the large traders started to distribute and sell off their positions. And it took, there was a delay in the reporting, because there is a 1 week delay. And so by the time this thing caught up, price had already sold off. So what I do with this is when I backtest it, I'm looking for the stair steps to start getting smaller, less room between one step, even if it's still going up. You see, notice how there's very little gain from like this week to this week. And that's when the market starts to turn, because it's basically running out of steam and it's starting to roll over. And at that point, if you are in the long from here, you'd want to basically, go to a shorter time frame and just look for that market structure shift. It's kind of hard to see this because I've had to zoom out on price to look at the indicator, but basically, right about here, we can kind of see a change in momentum start to go back down. So if I were in a long up here, I would be, as soon as I start to see this thing paint really small, like even from right about this stage, even by then it had already turned. So that's why, like I said, you can't trade this blindly, but it gives you a good idea. And if you went up to a shorter time frame, and you see that momentum shift, maybe a structure break on, like, this is a 6 hour chart, and if you go down to a 1 hour and you see the shift start to happen back down, you get out of your position, because looking at the COT data, that it's running out of steam, and that gives you pretty good confidence that you can exit your position at a good place before you start to give back all your profit, okay? And God forbid suffer a loss after locking in a nice trade. And then at that point, you can actually start to see this trade down and maybe even start to look for short positions, because it's running out of steam. We've broken market structure back here. Okay, we don't really get a sell signal on the indicator until price is way back here. You can see, when it went from this level down to this level, okay, you're already halfway through this move to the downside. So it is delayed. I will tell you that. So if you're gonna look at COT data this way, just make sure that you're looking at the price. Don't just go by what this thing is doing. This is an indicator, but it is delayed, okay? And it's delayed just by nature of the COT data. It is delayed. Remember, it comes out on Friday for the data that ended the previous Tuesday, okay? So it's delayed. And so if you're going by this, you're going to be very late on getting in and getting out of trades. But if you start to see momentum dry up, like right about here, this would have been your first indication. Notice how small this stair step is. So if I were in a long, like I said, I'd be going down to a shorter time frame, and I'd be, examining this area, like kind of like right there. In fact, I guess we can do that. Let's see, what's the date on this? This was beginning of July of 2024. So let me just see really quick if I scroll back here. It'll take me a little time to get back here. I'm trying to get back to July of last year if we can get there. This is crude oil, by the way. Okay, here it is right here. So let's just zoom in on the price a little bit. So this is that area we highlighted. And you can see right here, price went up, made a high, and then it started moving sideways. And then we start to break structure. So right in here is a good sign that, maybe this uptrend's over, right? We come down, we put in this low. All right, we trend lower, then we start to go back up, and then it fails, starts to go back down. So anywhere in here would have been a good exit, okay? Or even down to here, right? We take out structure, we take out this level right in here, that's your exit, okay? So it's just another way to look at the COT data. It's the same thing. It's showing you the same information. It's just a different form versus using the COT index. Because remember, the COT index has this, extreme long or extreme short area. But, this is a calculation. So this is not foolproof. I mean, because this is done with a calculation that basically takes 6 months of data and it creates a ratio of, the longs versus shorts, and it plots it on this index. But this is, not foolproof either. It's a nice clean way to look at it. But this can have severe delays as well. So this is basically the same data. It's just showing you the raw COT data in this stair step fashion, and you can follow that too. Okay. So I don't want to confuse things. It's still using COT data. It's just how it shows it. Okay. Here's another example here. Price was trending up, trending up, trending up. Now this one, we had a big stair step right into the highs. And then the very next week, we came down and we flattened out, and, we had a small drop. Okay. But you can see we were already pretty well into this downtrend. By the time we got this, we were already here on this down move. So the high was put in back here. All right. And so we've got this high sitting right here. And then, like I said, you use your technical skills and you go down to a shorter time frame. All right. And you look for a break of market structure. This is a 6-hour chart. I mean, again, go down to a 1-hour chart. And as soon as you see this structure after this high right here, this high was put in. As soon as this market structure is broken on, let's say, a 1-hour time frame, that's your exit. And sure enough, the very next week, you can see the COT data shifted bearish. And at that point, you could have actually jumped into a short and then rode this down on the short. Okay, until this point where you can see stair step down, down, down. And this one actually would have worked out great. This went all the way down. We flattened out here. Then we had this 1 week where price started going up right here, which is right here on the chart. This is a perfect one where you really didn't have any delay, right? You would have nailed this one basically right to the bottom, okay? And then we had, this sloping move up. It wasn't a great move up, but you could have traded this too. It doesn't look great, but because essentially was a corrective move. But, so you can see how you can use this to your advantage. But again, you just don't use it in a vacuum. You have to look at market structure, especially when you start to see it run out of steam on the price chart. and you start to see the stair steps from one week to the next on the reporting, that first week you see a small stair step, where there's almost where maybe it goes in the direction of the trend, but it's very small, if not neutral. And certainly if it starts to turn down, actually, if it starts to turn down, in this case, you've probably already waited too long, like you can see right here. So you're looking for these really small stair steps, for to kind of give you trend burnout, and then use your shorter time frame and look for that market structure shift. And as soon as you see that, that's your key to get out of your trade. Okay, and maybe you'll be early, maybe it'll just fool you and it'll be a pullback and it'll end up still going up. That's going to happen. Okay. So anyways, guys, I don't want to belabor this point, but again, this is just another indicator that shows COT data in just a little bit different format. And it's just another way of looking at it versus the COT index or the regular COT charts like this. This is the actual just plotting of the data that comes right from the COT report. That's what's shown down here. And again, this is the COT index on Insider Week. So you can use any of these. Okay. Well, this one's not very useful as is. You're better off either using the COT index or something like this on TradingView. Okay. And there are a bunch of other COT indicators on TradingView. I went through a lot of them. I don't find a lot of them really useful at all. The COT index one, which is very similar to the one on the Insider Week. This one right here, I showed you guys before. It's this one right here and again, I just turn off small speculators, right? And I got this kind of crunched down, and you're supposed to, but see, the thing is with this one, you're supposed to use this one on a weekly chart. Okay. It's not really usable on a shorter time frame. Let me just reset the chart. So this COT index indicator is basically the TradingView version of this one. Okay, it's going to show you pretty much the same thing. So either use Insider Week or go to TradingView and look up COT index, and you'll get this one, which again is very much almost a carbon copy of this one right here. Okay, so I would say to use either one of these or use this one. And like I said, you can plot both the commercials and the non-commercials. Let me get rid of this one. Move this back. Move myself over here. I don't need to see me here. And go in here. Now if I turn the commercials back on, you can see all we get is a mirror image. These are always going to be opposite of each other. Okay, you can see when one peaks, the other one troughs. When one troughs, the other one peaks, right? Because remember, the commercials are hedging their positions against market prices. So when prices are going up, the commercials are going to hedge short. When prices are going down, they're going to hedge long to protect their positions. So that's why I don't think it's necessary to have both of these plotted, because it's just showing them mirror images of each other. So for the sake of just keeping your chart clean, I just don't show the commercial traders on this one. Or you can just put on the commercial traders and turn off the non-commercials. Turn this one off. But then you're going to have the opposite trade where the price is going up. You're going to see the commercials going down. So it can get confusing. So for the sake of just having one on here, I just picked the non-commercials. Okay, because again, commercial traders are almost always going to show opposite of where the trend is. Okay, because again, they hedge against risk, whereas the non-commercials are like you and I. They're in it for speculation. They're in it to make money. They're in it to follow trends. So that's why these are often just going to mirror price. Okay, it's just the differences between the two entities. So, all right. So anyways, guys, pretty much leave it there. I'm not going to beat a dead horse. You can go through this on any of these markets. That happened to be, I think that was crude oil I was looking at, but it's the same thing on all of these. It actually works pretty well on crude oil and natural gas in terms of following this pretty well. And it works pretty well on soybean meal, but essentially it works on all of them. And it's just another way of looking at it. But again, you have to use higher time frames. You don't need to use the weekly, but I would say, nothing lower than the 4-hour, just to make this indicator, useful. So you don't have to zoom out so far on the price, because the lower you go in time frame, the more you've got to zoom out in order to see the stair steps, and then that's the smaller it's going to make the actual price chart. Okay, so I would recommend this for you swing traders, and we just see what happens here. So and that's it. And you can see I am holding a short on soybean meal. The market's closed, but it closed. I'm up $210 for the day, but that's at the market close. So, but I'm going to hold that one overnight and see what happens. Although I probably will consider closing that one when the overnight session starts, because as we talked about when we looked at the price chart on soybean meal, we could potentially be starting to see a bullish shift. I was just trading that on technicals to the downside. But with that said, I'm not too keen on holding that. So, even though I'm in that right now, I probably will close this position later. I wasn't able to close it before the market closed out today, but when it reopens tonight for the overnight session, I'm probably going to close this out. So, and it's, like I said, it's a small profit, $210. I only have one contract on it. So, but you can see it really didn't do anything. It just kind of went on either side of profitability today. It did end in profit, so that's good, but nothing great. So, all right. So, anyways, that is it, guys. I'm going to leave it there. Hopefully that wasn't confusing. Like I said, it's not meant to be confusing. It's just another way of looking at commitment of traders data versus using the index that I've been showing you. But again, all this is kind of moot until we start getting the COT data back again, and we get rid of all these flat lines at the end of these indicators right here like this, and start to actually be able to get a feeling for where everybody's at. So in the meantime, like I said, if you either have the choice of either just using price action, back to just technical trading, or, combining that with seasonality in addition to the price action for, the energy markets and the grain markets. Again, not really applicable for currencies, but, so that's kind of where we're at. And until the government reopens and we start getting the data back, this is the situation we're going to be in with this flat line on these indicators. So, all right. So I'll leave it there, guys. Again, questions, comments, leave them down below. Subscribe to the channel, and make sure you like the video on the way out. On the way out really helps the algorithm. I am trying to grow this channel, but I realize I don't post a lot of content, so that certainly doesn't help. So, all right, guys, have a great night. We'll talk to you all soon.